most of the people out there still have not been jarred into realizing what precious metals represent, even though you got a whale trader holding 50 million ounces long in silver contracts, where the central banks are buying more gold than at any time in history. And all of this chaos is around us. People still think that the road to retirement is paved only with dollars and mutual funds and stock certificates. And I don't know when they'll wake up or what will happen when they do. But if you do see an event, those premiums will go right back to where they were. This is as good of a buying opportunity as I've seen literally in almost 4 years.
Andy Schectman serves as the CEO of Miles Franklin Precious Metals, guiding the company's strategic vision in the dynamic precious metals market. In this video, Andy emphasizes the unique chance at hand, describing it as one of the finest buying opportunity. Gold and silver prices are higher in midday U.S. trading on July 31st. Amid a lack of fresh fundamental news to drive market prices, the precious metals traders are focusing on the improved near-term chart postures in gold and silver and doing some technically based buying. Amid economic uncertainty, Andy sees a rising demand for safe haven assets. As worries of a financial crisis grow, individuals are turning to gold and silver to safeguard their retirement savings. Data published in the Commitments of Traders (COT) reports over the past 4 reporting weeks indicate a number of highly unusual changes in COMEX silver futures positioning. One such highly unusual change is the emergence of a big managed money trader on the short side, which appears to be holding a net short position of roughly 10,000 contracts, 50 million ounces, in COMEX silver futures contracts. The current volatility GLD is 3.01%, while SLV has a volatility of 7.9%. This indicates that GLD experiences smaller price fluctuations and is considered to be less risky than SLV based on this measure. Schectman's assessment reveals a complex interplay of wholesale shortages and bank troubles, offering a detailed view of the silver market's dynamics. Last week, there were significant withdrawals from 2 of the world's largest gold and silver exchange-traded funds, the GLD and SLV. Some analysts believe that the withdrawals could be due to concerns about the global economy. Others believe that investors may be selling their gold and silver holdings in order to buy other assets, such as stocks or bonds. We will now bring you clips of Andy Schectman from his recent interview with Arcadia Economics. Before we proceed further in this video, please make sure to subscribe our channel and click the bell icon to stay updated.
Yeah, we can talk about silver. There's a massive silver whale on COMEX who has 50 million ounces in contracts on the long side. Is he going to take delivery? It's in the others category. It's not a commercial bank. It's not a managed money. It's the others, the ones who have been draining COMEX all these years. We saw 200,000 ounces come out of GLD last week. 1.5 million ounces of silver come out of SLV last week. Where's that going? Who's taking that? There are things that are happening, but it makes me believe it's part of a bigger picture. As Ted Butler would say, he said the metal is being sent to places of more urgent need as opposed to plain vanilla investor liquidation. So yeah, all of these things fit into a bigger picture, and that, to me, is my fixation, I guess. It's interesting because you listen to Ted Butler, and he'll tell you there's a massive shortage in wholesale 1,000-ounce bars on COMEX, and the bleed down off the LBMA and COMEX in particular is making it so that there is a big shortage, but yet it's the most flush the retail market has been since 2020. Now, does that ultimately trickle down into the retail market? Sure, absolutely could. If the bank on Friday night, U.S. Bank Heartland, had failed and been bailed in, as I expect we will see. Look, there's over $1 trillion worth of commercial real estate loans that have to be reset this year and next, 70% of which are owned by the regional banks. 60% are delinquent. What happens when some of these banks go upside down? When these small businesses, of which these regional banks hold 70% of the loans, go upside down and walk away from these non-recourse commercial loans. And these banks go upside down and these banks get bailed in. How fast will that change? It'll happen overnight. We added 14,000 clients in March and April. In 45 days, when the banks failed and they were bailed out, and they're not supposed to be bailed out. The law in the Dodd-Frank Act said they're supposed to be bailed in. At what point do these banks stop cannibalizing the smaller banks because their balance sheets become too big? You know, for people who want barter, this is the only thing I would ever buy if I weren't buying silver. You know, a lot of people who listen to this show probably have been buying silver forever, may not own much in the way of gold. The 1/10 ounce gold eagle of every coin I've ever sold across the board, numismatic or not, is maybe the only coin that has always maintained a significant premium above its melt value. Buy or sell. They are made in tiny quantities. They are hugely demanded. And I figured I'd switch it up a little bit. The 1/10 ounce gold eagle, $37.50 over spot. Of course, you divide that by 10 over its melt value is an easier way to do it. Take the price of gold, divide it by 10, add $37.50. They're 2023. They are brand new. But look, anything from silver eagles to junk silver, to silver rounds, to silver bars, they're the lowest I've sold them for in over 4 years. Same thing is true with every company out there. Everything is on sale. But in particular today, the 1/10 ounce gold eagle, I have hardly done any gold in 3 years because silver is the best value. It still is. But I wouldn't count gold out either. And to put a little allocation into some small barterable gold coins, not a bad idea. If you want silver, we have tons of it at really great prices, whatever you're looking for.
Schectman sees the BRICS as a potential catalyst for significant de-dollarization, but he stresses that this change won't happen immediately, even with the introduction of a gold-backed currency on August. So instead of talking about a common BRICS currency, efforts should be made to try and design a mechanism that facilitates bilateral trade and, at the same time, substantially reduces the demand for US dollars, therefore reducing trade costs. Schectman's analysis highlights how Saudi Arabia's strategic decisions, combined with alliances like BRICS, magnify the impact of these shifts. Saudi Arabia's potential move to join BRICS would also underpin and highlight closer diplomatic ties, which could support Saudi efforts to defend market shares in significant oil-importing countries such as China, India, and South Africa. In addition, Saudi Arabia has repeatedly led OPEC decisions to cut collective output in a move widely seen as supporting Russia and a deliberate snub to the U.S. If BRICS convinces other developing countries to ditch the US dollar, the geopolitical dynamics could alter world trade relations. Let's get back to interview.
I had to say was it doesn't matter if they issue a gold-backed currency on the 22nd. And people are focusing too much on the BRICS. Now, from me, that must sound kind of weird because it's been all I've talked about for the past 2.5 years. However, it is a big deal. It's a huge deal. The BRICS, ultimately, I believe, the catalyst, if you will, for further and much more severe de-dollarization, but it won't happen on the 22nd, whether or not they issue a gold-backed currency. I do believe that ultimately they will issue, whether it be a commodity-backed currency or a gold-backed currency. When you focus on the BRICS alone, you are only getting one half of the story. The growing coalition certainly makes the BRICS more powerful and makes them more formidable. But it is Saudi Arabia, to me, that is the linchpin of it all. You must speak of Saudi Arabia when you speak of BRICS and of the massive ultimate de-dollarization. And to me, it is the linchpin of the dollar hegemony. Saudi Arabia and OPEC, all of the OPEC countries being on the Belt Road, all of them, will issue a statement, and that will be something like this. Listen, you guys are going green you sign an executive order. By 2050, you plan to be completely green. And look, we've partnered with the Shanghai Cooperation Organization, with the BRICS, with the Belt Road, with the Eurasian Economic Union, with the New Development Bank. We told everyone in Davos that we are going to take other currencies. You've known this for a while, but why would you care? You're going green. The rest of the world is not. All of their pieces will be in place when they make this announcement: protection, agreements, all of these things. And when you realize they're being protected by what amounts to 2 of the 3 largest nuclear arsenals in the world, they become very formidable. GDPs, when put together, that are far greater than ours, becomes very formidable. When that announcement is made in conjunction with all of these countries who have unified, in conjunction with the belief and realization that they will issue a commodity-backed currency, And Saudi Arabia says, hey, we've decided to take the new BRICS settlement currency for oil purchases, or until the new BRICS currency is operational, we're going to take the yuan, which is immediately convertible into gold on the Shanghai Gold Exchange. You add Saudi Arabia to the BRICS and look at all of the countries who Saudi Arabia and organizations whom Saudi Arabia has already applied to, it becomes a whole lot more of an interesting story. And so, yes, I do believe the BRICS and their growing coalition of countries is a very big deal. But when you add these other countries to it and bring Saudi Arabia into the picture, it becomes a massive deal. You know, one of the things that people are talking about is that the BRICS currency will be listed as a settlement currency, and I agree with that.
As the coalition endeavors to diminish dependence on the US dollar, the dynamics of gold and silver trade and investment could experience a noteworthy shift. How do you think these evolving developments influence silver's trajectory and its perceived value in times of economic uncertainty? Share your thoughts in comments section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more interesting topics. Thank you for watching.